Welcome to Second Take, the show that focuses on the issues behind the news. Mining Weekly editor Martin Creamer joins me today to unpack the latest in the mining industry. Welcome, Martin.
Thanks, Ashley.
Now, Anglo American believes crop nutrients has doubled the potential contribution of thermal coal as it makes its exit from the coal business.
Yeah, who would have imagined that, a company that's been in coal for so many years, that has been involved in the export of coal from South Africa through the Richards Bay coal terminal, is now exiting coal, and they're entering fertilizers. And I think no one would have imagined that to happen, although Anglo does tell me that in the distant past they were also involved in crop nutrients. So it's a return. So I suppose there's always a big return cycle with all these companies. They come back to the things. But we never sort of recognized Anglo as being in crop nutrients. And what they're doing now is that they're saying that their development at Woodsmith in England, in North Yorkshire, when it actually builds up, it's going to more than replace coal, which they're going to be exiting. And the big exit will come in South Africa. They did sell a lot of their coal assets some years back. Those were the assets that supplied Eskom. But they continue to keep their coal assets that are exporting to the rest of the world through Richards Bay. And now they're saying that they're actually into a better spot, particularly as the world moves away from high carbon power generation, which coal represents, and they're looking to get a better return out of the soil because there's less and less soil to grow agricultural activities on. And if you put these nutrients on that are good, of course, you get a much higher yield per hectare, and that is what the world is needing to do at the moment. So the timing seems to be very good that they're replacing coal with crop nutrients and doing so at a big advantage.
And RBPlat is ready to go into the second half of the year with gold streaming tailwinds.
It's interesting, I was just with Glencore now, and I didn't just realize that they actually are the beneficiaries of a million ounces of gold a year. So with the gold price really moving quite dramatically, a lot of these people are very delighted that they're getting a good stream out of gold, even though they're not in gold mining. And Glencore's not in gold mining. It's the same with Royal Bafokeng Platinum. They've streaming their gold, which is giving them a nice revenue base, but they are not really in gold. But it shows you how it's helping them at this point. And that's not the only thing that's helping RBPlat, of course. The platinum group metals prices really are doing well, particularly the rhodium price. And because they're producing more UG2 reef, which leans towards more palladium and rhodium, they've had a high-flying quarter. I mean, when I saw the percentage growths beyond 2,000%, I thought there had been a misprint. These noughts were falling off the side of the page, but it was genuinely way above 2,000% that their earnings rose. So it shows you how you've got to be patient in mining. It's a cyclical business. And when that cycle changes, it can be dramatic. As the CFO of RBPlat said, normally when you a chief financial officer, you've got to watch out for your adjectives. You can use solid growth, strong growth, but you don't use too many dramatic words. And he says, but I'm going to use the word dramatic because this has been a dramatic improvement. And we see that it looks like it's going to be sustainable. There's still strong demand for palladium, still strong demand for rhodium. And we note now that the platinum price even is getting back to that $1,000 an ounce mark. So if you put all those together in one basket, those platinum group metal prices are very good, and we can see how it's helping Royal Bafokeng Platinum, which also built up a large stockpile over the first half, which they can then turn to platinum and palladium and all the other platinum group metals in the second half, which gives them a marvelous head start.
And lastly, Anglo American is excited about South Africa's lifting of exchange control.
Yes, I think it was good of Stephen Pearce, the Chief Financial Officer of Anglo American, to actually mention this during the latest presentation of half-year results, that South Africa, in terms of exchange control, has come into line with what they call the OECD countries, which is, in his view, a determination to get growth going in South Africa, because this exchange control in the past had been a little bit of a stumbling block for investors. When they removed it, and it's not that recent that they did so, they showed that they were looking for foreign investment. And his comment, I think, is very pertinent, saying that this is an indication that South Africa wants to grow economically, and that it has helped Anglo in a way that didn't really change the goalposts or anything like that, but it made things smoother for them, and that is an indication that it'll make things smoother for foreign investors. So I was glad that Stephen Pearce actually took the trouble to mention this during the last presentation of results, because at the moment we are really needing investments of all kind, including foreign investments.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashni.
That's it for today. Join us again next week for more news analysis on the local and global mining industries. And don't forget to listen to the audio version of our Mining Weekly daily email newsletter.